Now I'm going to explain basic capitalization methods with public venture capital, and I'm going to use the United States laws and regulations because, first of all, the U.S. is the world's largest capital market. Also, those are the rules and laws that I know the best. Uh, Canada has several different public capitalization strategies, and the rest of the world is beginning to follow suit because it's becoming recognized by the capitalized world that the restriction on liquidity and the restriction on capitalization has really not been serving the general good of society and has led to, really the world crises that we're in so many different ways. So uh, let's get to it. So the U.S. has two primary public offering regulations. One is called regulation crowdfunding, and that allows a company to raise up to $5 million from the general public. And then the next one is called Regulation A, and that allows the company to raise up to $75 million at a time from the general public. So now these offering structures can be used more than once to raise larger amounts. And then eventually, if a company's succeeding, there are larger public offering opportunities. When you're getting into the billions. So what has been missing for so long were any intermediate public steps. The ability to raise billions from the public has always been there, but that's been the exclusive domain of basically Wall Street type investment houses, and anything below that has been like too small for consideration. This is why startups of every type, not just vegans, have had a very difficult time getting any traction whatsoever unless they were in the sweet spot of the Silicon Valley venture capital community. So there's a lot of companies that are not a fit for that, and they've all struggled to raise capital. So let's look at how this works. In the prior topics, we discussed the need for marketing. So what we're seeing in general is that it costs about $100,000 in marketing to raise your first million through public offer. So let's say that we want to start with a vegan company that's come through our mentoring program and they're ready to raise capital. The idea is that our community together puts in $100,000 to $200,000. The first 100 goes for marketing to raise more capital, and the next amount of money allows the company to continue to grow, but at a kind of a bootstrap level, because really below the first million, you're just not going to make. You can't afford to hire people. You can't build a staff. You can't really build out a company anymore of any scale for less than $1 million. Now there are a lot of cool companies that can be started for less, and we are for that. But here we're going to be talking about companies that can reach a kind of scale and really begin to transform some of the larger markets we discussed in prior topics. So let's say we raise $200,000 from our community, and then we take $100,000 and we raise the first million via public offer. Now we've got a supply of capital for growth as well as marketing the next million and the next million and onward and onward. Now with regulation crowdfunding, that's $5 million. So to effectively do the larger raise, the $75 million next raise under Regulation A, the cost to raise the whole $75 million is about $1 million. So if we raise $5 million for a company, we're going to want to reserve $1 or $2 million of that for marketing their next round. And if you look at how every company's grown, a certain portion of capital is always reserved for raising the next round. This is something that a lot of investors don't realize. It's like, I've had a lot of people say, well, you're asking me for money so you can raise more money? Yes, because raising money it's like a whole separate business practically. You have to develop your investment product. That involves lawyers. That involves designing the marketing strategy. And then there's the cost of actually marketing, just like a physical product or any normal product for your company. So this is a very important concept for everybody to recognize. Now, if you're a high net worth individual or an existing venture capital fund, you can see that you could use this understanding to really leverage and expand your results. And this is an important message. My goal is to get this message out to everyone who's already a practitioner in vegan finance, that we can really leverage our assets. So let's take, say, a company that wants to invest a venture capital company, or a high net worth individual that wants to put $2 million into the vegan economy. Well, you could do that through straight investments. You're not getting any marketing leverage, you're not getting any capital leverage, and you're hoping that there'll be a bigger, private equity firm that will put in more money for the following round from your round. So you're taking a lot of risk as well. Now, if instead we take that same 2 million and we distribute it to 10 startups, each one staked with 200,000, now we've got a $100,000 marketing budget for each one for raising the next round, and sequentially up to 5 million, and then the next 75 million. So at the outset, that's 10 times 5 million. That's $50 million leveraged by a $2 million investment. Or if we go all the way to 80 million, 80 million times 10 is $800 million. So imagine somebody with $2 million that wants to invest in the vegan economy. They should be looking at how directly that can be leveraged into $80 million of capitalization. Now we're talking big business, and who's destroying the planet? Big business. So, we need to really tie our capitalization strategies to what's needed for the animals and for the environment, of course, for human health. So, now if we're not already a wealthy investor, because these are public offers and through the vegan launch community, we can all enjoy that same leverage as smaller investors. So to bring together $200,000 doesn't necessarily require a high net worth individual or venture capital fund if we come together as a community. So, $100,000 is 1,000 people times 100. And typically, if you go and look at the crowdfunding sites, it takes about 500 to 1,000 investors to raise $1 million straight off. So if we're talking about raising the first seed capital, $200,000, we're finding that's about maybe under, it's a relatively small number of people, because we're finding in our experience that there's a lot of people that can afford to put in 1,000. Maybe they can't put in 10,000 or 100,000, but there's quite a lot of people. So the number of people it requires to get the ball rolling is actually quite small, and the size of the checks they need to write is also quite small. So this is a reason why this can work even if we don't get high net worth individuals involved or venture capital firms. Now, obviously, they're invited to, because they're vegan too. We want to help them too. We want them to be, using their money for the maximum leverage, not only for making a profit, which we're fine with, but also for the animals, right? The more they can leverage their money, the faster we're going to grow. So the real point here is how quickly we can develop investment products that can be marketed to the broader vegan investor market. And now, thanks to the liquidity boom, we don't have to wait for a company to go public on the NASDAQ for them to be selling investment products to the general public. We can do it right now. So now we're through with the essence of this lesson, and I appreciate you participating, and thanks a lot.